ICICI Bank and Axis Bank, and Reliance Industries is the other, big heavyweight, which is in fact contributing to the gains on the Nifty. And as one might expect, if you have HDFC Bank, ICICI Bank, and Axis Bank advancing, naturally you will have that strength come through as far as the Bank Nifty is concerned as well. But moving on, we do have a story for you, and that's Blackstone, which is back, and Aadhar Housing Finance aims to refile for the IPO according to sources to NDTV Profit. We have Saloni who's joining us to give us more details. Saloni, good afternoon. What do you have for us?
Hi, Agam. Yes, as you mentioned, Blackstone-backed Aadhar Housing Finance is aiming to refile the IPO papers by February in the next 2 weeks. That's what we've known from sources. Now, Aadhar Housing Finance had applied for IPO in January of 2021, and they had gotten the SEBI in order in May of 2022. So that means that they had 1 year, that is till May 2023, to come up with the IPO, but they did not, which we've gotten to know from sources based on the market conditions that we had seen in the first half of the year last year. So now they are aiming to refile for it, and they aim to raise about rupees 4,000 to 6,000 crore range, which will depend on how much equity shares they sell through their OFS. Now, this is reduced from the rupees 7,000 crore that they had actually aimed to file when they had, released the DRHP in Jan 2021. Blackstone, which owns about 90% actually stake in the company, and they had acquired the company by Divan Housing in 2019. So they will also sell stake. Now, this is at a time when private equity investors are, going with the whole market momentum and trying to exit these firms that they hold stakes in through the primary issues as well. So that's what we have from our sources as of now.
All right, Saloni, thanks for getting us those updates. We'll continue to give you more on the same as and when we have news surrounding that particular subject. But we move on and address Weber Global. We have the Group CFO of Weber Global, Mr. Nitin Panwad, who's joining us at the moment on what looks like a very strong quarter too. Nitin, good afternoon. Thanks for joining in. Can you tell us as to how we've seen so much strength come in? What are the factors that are contributing to the near 23% growth in your revenue? And we've also seen an improvement in margins. Can you take us through the highlights of the quarter?
Sure. Good afternoon to you and all the viewers, and thanks for having me. So past quarter performance, we are pretty pleased with the performance with the 23% growth we have reported in past quarter at a record revenue of 888 crores. These are multiple factors. They are existing business, which is also improving. But apart from that, the new acquisitions that we have done in past quarter, which is also coming in our revenue line. So existing business with the increasing in our households, expansion in Germany, focusing on our customer experience side, and the new acquisition assimilation successfully done in our existing business, all helping us to improve our top line. In terms of margins, so we are continuously focusing on the pricing of the product and giving us leveraging our supply chain vertical integrated in India and Asian countries, helping us to improve our gross margins. And also with the higher sales, we generate operating leverage, overall giving us a benefit in our operating margins, which is almost 11% we have reported, 99 crores in last quarter.
Okay, so what I noticed in terms of your geographical mix, there has been a little bit more diversification. I don't know if one quarter would be enough to make that observation, but from the quarter last year, your contribution from US has come down from nearly 70% to currently 62%. Is this something which has been sought after actively? Are you looking for other markets to diversify and thereby reducing risk?
Yeah. So in terms of percentage, the share has gone down, but the absolute terms, all the territory is growing. US itself has grown in constant currency terms 7% over past year, same quarter. But the new acquisition, which is Ideal World in UK and Mindful Souls in Dutch-based company in Europe, so that is expanding, which is obviously last year there was no revenue of it. So that is why you see the other than US market share has increased. But we are focusing on our existing markets, not looking to enter in a new territory. because there's a lot of potential in our existing household for the acquisition itself. US is only having 30 to 40% additional household that we can reach. But right now, around 70% we are covered in US. So there's a lot of potential in existing markets. So we are focusing on our existing territories.
Can you give us an idea as far as your digital revenue outlook is concerned? I believe it is 40% of your B2C revenue mix currently. What's the way forward here?
Yeah, so way forward is continuously increasing digital market share within the 40% last quarter that we have reported. And our guidance that we have given to reach 50% by FY27, we are comfortable on it to achieve that number by FY27.
Right. You also, briefly mentioned what is happening with Ideal World, and also if you could give us an idea about what's happening with Mindful Souls, BV, a little bit of an uptake with respect to the business, how things are panning out here.
Sure. So both of the acquisition is working well. That they at the end of the last quarter, September end, that we got that both of the company and the revenue is reported in this quarter for the full quarter, and then both is working out very well. Ideal World, especially the company couldn't hardly generate any profits in past history, but within the first quarter on direct cost basis, we have generated profit in Ideal World. And we anticipate that after allocating all the costs, which is indirect cost, rent or support staff or IT or HR, finance, salaries. After allocation, a full allocation, we anticipate that next 9 months we will be profitable in Ideal World. But on direct cost basis, it is already profitable. But also in Mindful Souls, which is a cash generating and profitable company, 10% profit margins they have, and we have also seen in the past quarter the 10% margin Mindful Souls has generated for us.
Okay, also a question on the kind of investments that you have earmarked, not only for this upcoming quarter, but also for perhaps FY25. And in what areas are these investments going into?
Yeah, so our main focus for this year and the upcoming years to expand our digital presence through the acquiring customer via social media or omni-channel or TV-driven customers. Also, we are focusing on our broadcasting, increasing our penetration in US. Germany, we already 95% covered, but increasing our penetration in our US markets. So those investments will give us a return, and we are anticipating that FY25 to grow high-teen numbers, and subsequently after FY25, a mid-teen numbers growth, and we'll continue that guidance.
Okay, Nitin, we'll leave it at that. Thank you so much for joining us and taking us through the quarter's earnings, as well as what we can expect going forward. We wish you the best for the future. That's, of course, the management of Weber Global, looking at a very strong quarter coming through. We are looking at a little bit of weakness in today's day of trade, but if you keep that on the side, it's been quite a year for Weber Global too, and which is very evident in the kind of numbers that you're seeing. There you have it. That's your 12-month up move. So a clear outperformance as far as this particular company is concerned. But on the note, we slip into a short break, but on the other side, we get you a lot more in terms of stocks. Stay tuned in.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and the company which is coming to the Dalal Street next week is APJ Surendra Park Hotels. It's a company which owns the brand The Park Hotel. And joining me is Miss Priya Paul, who's the chairperson and executive director, and Vijay Diwan, who's the managing director of the company. The company is coming out with an IPO with the price band of 147 to 155, opening on Feb 5th, closes on Feb 7th. It's a fresh issue of 600 crores and OFS of 320 crores. So a total size of 920 crores coming in as part of the IPO. Ma'am and Mr. Diwan, thank you for joining us on NDTV Profit. To begin with, Ms. Paul, tell us, what is the kind of expansion plans that you have for this brand Park, and since you are getting into a much bigger city or other cities as well, what is that capex that you're looking at?
Thank you. Thank you for having us on your show. We currently have 30 hotels which are open across multiple brands. The Park Hotels, of course, being the signature iconic one that you must know. And we have another about 20 hotels in the group under the brand owned by the Park. And that is present in Tier 2 and Tier 3 cities across the country. And as you will see in the RHP, we have a very robust growth plan to take this to about 56 hotels by 2026. And through a mixture of owned, leased and managed properties across all these brands. And that's how we see ourselves moving forward, and we you'll see us in many more cities in the years to come.
Mr. Diwan, you are the 8th largest hotel chain in the country. You're raising 600 crores in fresh capital. What is it going to be used for?
So this capital is going to be largely used to retire the debt. About 550 crores are going to be used to retire the debt, and the balance 50 crores are going to be used for the general corporate purposes.
Can you give me a sense, because Ms. Paul just articulated the runway to expand to nearly 56 hotels by 2026. How are you going to fund those capex program?
Can I take that? So actually, I didn't finish your question, but it's actually, there's a lot of internal accruals. So all our projects will be funded through these internal accruals. The market is very robust. There's a healthy growth. There's a ARR growth across the country. And with that, we will fund our future growth. And we are building about 630 rooms in the next few years, which is also as per the DRHP. And which includes 3 greenfield projects as well as 2 capacity expansions in our existing properties in Visakhapatnam and Navi Mumbai.
Just to get an idea of this expansion plan that you have, will it be all owned ones, or will it be some on lease and some managed?
Well, we've grown to 30 hotels with a combination of these strategies: ownership, lease and management contracts. As I said, currently we have 30 hotels, of which 7 are owned. We'll be adding owned properties, another 3 as per the RHP in Pune, in Jaipur, in Kolkata. And then we'll be doing capacity expansions in our properties in Visakhapatnam and Navi Mumbai. We'll add to that with management contracts and lease properties, which are in many towns across India. And we have 15 of them signed as per the RHP, and these will be opening out in the next few years.
So just to add to that, presently we have about 2,298 rooms. We plan to take it to 4,405 rooms over the next 5 years. Currently, as Ms. Paul just mentioned, we are adding 630 rooms of our own, and about 1,365 rooms are going to be added on the management side of the business. So all this will add up to from 2,298 rooms to 4,405 rooms. So virtually sort of doubling our inventory over the next 5 years.
Yeah, and that's the reason I was asking, how are you going to fund it, and what is the kind of investment that will take you to doubling of the entire rooms?
No, so largely the investment is going to be all through internal accruals, which the internal accruals are going to largely fund the expansion plan. And the management contracts anyway are separate and outside this. So 630 rooms are going to be internally funded. So this is how the plan is. And currently, as Ms. Paul also, the current situation, the current is that we have, say, 3 hotels which we are going to develop of our own. And in total, we have about 15 lakh square feet of total FSI which we have in our balance sheet. And out of which, in the next 5 years, we're going to develop about 11 lakhs of this FSI. 2.5 lakhs FSI development is going to take place in Pune. 6 lakhs is going to take place in EM Bypass in Calcutta. About 1.5 lakhs development is planned for Visakhapatnam and 1 lakh for Navi Mumbai. So 11 lakhs of FSI, which is currently in the balance sheet, is going to be developed by us over the next 5 years.
We have with us the management of Mahindra Finance. We have Mr. Ramesh Iyer, who is the Managing Director at Mahindra Finance and has been for a while now. Pleasure welcoming you to NDTV Profit. Sir, talk to us about the numbers itself, because, we've seen over the last few quarters a consistent bettering of the numbers. Asset quality this time has improved. Provisioning has come off on a higher base of last quarter. So where to from here in terms of the numbers? How do you assess them in this quarter, and where to from here?
So very clearly, after the March 22 results, we had put out what do we see and where are we going from here by 2025. I think we are trending extremely well on that, whether it comes to the asset growth, whether it comes to asset quality, whether it comes to the NIMs. In all of that, I think we are doing extremely well. I think so far as this quarter in particular is concerned, I think the demand was pretty good. The rural sentiments was doing very well, and we got the benefit of it in our disbursement. And you can see the reflection of it very clearly in the AUM growth as well. In as far as NIMs are concerned, you've seen improvement in NIMs have happened, and we have committed to this in the previous quarter, saying that we've taken few actions, and we believe that 6.5, 6.6 NIMs will move up to 6.8, and over a period it will first go to 7%. The borrowing cost still remains elevated, and in spite of that, we have reached the 6.8. We passed on some price increase to consumer, but that's one step. Two, our product mix have changed a little. Our pre-owned vehicle disbursements have gone up. They come at a better yield. Third, to our existing customers, we have provided some cross-sell opportunities, and there are some fee-based income which is coming in. That very clearly sets the tone for the NIMS improvement. And as far as overall collections are concerned, the collection efficiencies have held up throughout, upward of 95% plus. And that's very clearly reflected in our stage 2 remaining constant, which means the forward flow is not happening. That's a pretty good news when it comes to going forward looking at the GS3 numbers. The GS3 by itself has come down by 2 or 3 actions. One, of course, collections from these customers, terminating and settling with these customers, and therefore terminating those contracts. And of course, wherever required, take back the vehicle and transact on them. That has helped bring down the GS3 number, and therefore the overall credit cost has actually halved from 2.4 earlier to a 1.2 number at this stage. So overall, I think we've done well on all fronts, and it's going exactly the way we think it wanted to when we committed in 2022, go up to 2025.